It's March 12th, and this is the video log that takes 30,000 to a million, although that's getting quite a bit difficult to do as of late. It's been a soul-crushing week, soul-crushing month, soul-crushing day. So I want to jump into the account here. I'm sitting at just below 150,000, 149. And as you can see by the day's performance, it's pretty bad. And it's been like that all week as well. So I'm suffering some really heavy losses. There's blood everywhere. All right, it's bleeding. I'm not at the point where I'm calling 911 yet, but I'm getting really close. And I don't like to cut losses, I guess. So what I do is just shift the account in such a way to kind of have the same exposure, yet don't necessarily get rid of my upside. And so what I'll end up doing is I'll increase the risk of the account more as the market keeps dropping. There is a little bit of a problem with that though, because this time it feels a little bit different. Like in 2020, if you go back and watch some of those videos, I was actually pretty upbeat about the whole scenario. Like my account was diving, but I knew that it was going to recover. This time it seems like it might be a little bit more of a slow grind down, because instead of a swift, reactionary move, people are actually taking weight and taking stock of the situation, no pun intended, and realizing that the world is fragmenting a little bit economically as a result of either egos or misunderstandings or what have you. And I don't know if that trend is just a little correction in an overall trend of global friendship and commerce, or if that trend is if it's the beginning of a new trend of isolationist kind of policies around the world because of whatever reasons. So I'm just not sure how long it's going to... I think though, unless we have some kind of resolve and resolution to the current global events, this market might just keep dropping, but I don't want to sell. So I'm going to review the account, and then I might talk about a couple other positions. Big headline is EBIX, right? EBIX actually popped up very high on the news of the IPO. I didn't expect it to pop up that high. I've actually sold call options against it, so my upside was very limited. But in the last 2 days, it's actually been correcting back down, and so I don't know if it will drop back down below that $35 level, or in fact if it will even go below 30 again and completely negate that pop higher, which has been the trend for the stock for quite some time. Let me actually, while I'm talking about it, why don't I click on it so I show you what's going on here. So it was down almost 7% today. It was over $40. This is the jump that we're... Let me see if you can see it. Yeah. So this is the weekly chart. I started off at 25. Well, first of all, it was drifting down. You can see all the way down on the under $25, which is very bad. But then it popped on the news all the way up to the 30s and then 40s eventually. And that's good for me because I was actually kind of looking to get rid of the position. But now it's drifting lower, and it might actually hit those $30 levels or below. So I don't know, but it's good for me for it to stay above 35, because then I can actually get rid of the position entirely at the end of the month and regain and eliminate some of the margin, some of the leverage that I've taken out in order to sustain this account. So this win would actually help me quite a bit when it comes to my survivability. So if we look at the investment tab, you'll see that I have $127,000 in margin right now, which is almost double the account. And I'm reaching that, getting closer to that 100% margin level. So it's very dangerous. And I don't want to necessarily do that. So I want to reduce. And by 100%, I mean, this is going to show 50, right? Because half of the account would be margin, the other half would be equities. So I'd be leveraged 100%. So I don't want to do that. And I want to reduce. So getting rid of the EBIX position would be great. Another position that I might be getting rid of is Goldman Sachs. So if I scroll down here, Goldman Sachs currently occupies quite a bit of the account. It's $42,500. It almost sold today. So if it were to have closed at 32.5 and it was above that in the beginning of the day, then I would have actually got that cash eliminated from the margin as well. So that would be another, $30-some thousand. So that'd be great. But it actually finished below 332,000.5. So now I can sell another call option against it for the next week and collect some premium. But honestly, I don't even know. I might actually sell in the money call option in order to try to gain more premium and protect against downside. So I'm not sure if I'm going to do at the money or below the money or the 332.5 watermark there, or not watermark, but you get what I'm saying. Level, strike price. So this is the account. This is the weekly chart of the account, which is actually not as bad as you might think. But this is the monthly chart. It's down 20%. A 3-month chart is 21.34. But from the highs, it's actually more like, even higher than that. I think the high is right here, 201,000. And now I'm sitting below 150. So more than 25%, more than 26%, I think. And it doesn't feel good. It definitely doesn't feel good. Let me actually run through the account so you can see the positions before I talk about how horrible this feels. So these are all the options. There are quite a bit of them. I've sold some PayPal and actually bought call options on PayPal with $130 strike price leaps that expire in 2024. I'm really optimistic and hopeful that, not optimistic, but I'm hopeful at this point that things will get resolved and the company will go back up. So far, it's drifting lower and it's selling like it's going out of business, like the rest of these stocks. Anyway, you can pause the video player at any moment to try to figure out the exact positions that I have on there. These are my equity positions here. Keep in mind that they play along with some of the options, and these numbers, although they're a true representative of what my account holds, the real effectiveness of them is not as big. You'll find some strange stuff here, like for example, I picked up some Tencent today and some Robinhood near the lows. So those are either going to be trades or holds. I'm not actually sure, but I might end up just selling out of them if I really need to improve the health of the account. But the deals are just so good, and these stocks are just on sale. Like, I know people are hating on Robinhood, but I mean, it's been going down so hard. This is a 3-month chart. It's down 44%. 1 year chart here. You can see from the IPO, it's down like over 70%. And it's probably down, a lot higher than that from its peak after the IPO pop. And Tencent, to go back, Tencent had another down day, but the thing with Tencent is that there's no delisting fear here, right? Because Tencent already trades over the market, over the counter. So what over the counter means is it's not traded on an actual exchange like the NYSE, the New York Stock Exchange, or the Hang Seng or whatever. Well, I mean, it might be traded there, but or the Nasdaq or something like that. It's just independently traded in between banks, and that's kind of like the not the secondary, but so the primary market is the IPO. Secondary market is what we normally trade in stocks. And in the third market, it's kind of like the over-the-counter market. I forgot what it's called. There's a name for it. But anyway, that's where it's traded, and it's not listed anywhere for it to be delisted in the United States. So there's no risk there for this company. So I don't understand why it gets hit with all the rest of the Chinese companies. I assume it's because just the situation between America and China is worsening, and people are fearful that investing in China is going to be either banned or frowned upon by the American public, and so people are selling out. So here's the chart anyways. 1 year chart is brutal, down 50%. One thing that I found interesting about this company is that it actually pays a dividend. And I don't know if it says it anywhere here, but dividend yield, yeah, right here. Let me see if you can see it. Yep. So it's 0.39. So this is one of the only VIEs, ADRs, that variable interest entity, American Depository Receipts, that actually gives out a dividend. So I'm looking forward to see that mechanic, because I was under the impression that China doesn't really like to let the money out of the country, so they kind of keep a lid on that, I think. Or maybe it's because all these VIEs are just growth stocks, and it's not typical for growth stocks to pay out money to the shareholders because they use it to grow, right? So, but anyway, I wanted to kind of receive some dividend there to see if they actually go through. So that's about 10 cent. And then Robinhood, obviously, it's just a big brand name, and it's down to like, under 9 billion market cap right now, I think. Yeah. Oh no, it's 9.57 billion market cap. Really low employee count. Bulgarian CEO. Not that that matters, but I do like the platform quite a bit. It is very enjoyable. So I'm a bull on the platform. I think there's a lot of brand name in there that even if the company drops low enough, it's gonna get bought up somewhere by someone. Because there's just a lot of customers in there. So let's say, for example, JP Morgan or whatever, or like Ameritrade, TD Ameritrade, or E-Trade or whatever. Well, E-Trade's owned by someone, I think. But anyways, one of those companies, they're going to find a way to kind of synergize. Charles Schwab, I think, bought TD Ameritrade as well. So I don't know. They'll buy each other up. And I think that's a good thing for those companies because there are synergies. They're acquiring all this huge, massive, investor base that they can then synergize and maybe fire some of the middlemen, etc. So anyway, I think that there's some brand value there. So this price is actually very appealing for some merger and acquisition, but they might stay independent, and find a way to kind of restore some of their reputation, maybe, and find a way to monetize their customers a bit better. So we'll find out what happens there. So there's some strange positions. And lastly, Diddy was basically rejected, by the way, from listing in the Hong Kong exchange because of security concerns that the Chinese government still had. And not only are they not letting them list on the US markets, they're not letting them list in Hong Kong either. So by the way, for those of you who don't know, all of these companies that are you're probably trading on the American exchanges are also variable interest entities on the Hong Kong exchange as well. So I guess the Chinese regulators consider Hong Kong out of the jurisdiction, but part of China, right? It's very political, but technically, so there are also VIEs. And what a VIE is, it's a basically kind of like a shell company that owns the rights of a particular company in China, owns the rights for their profits basically, and they don't actually own any shares themselves. They just have a contract that says, let's say I own a barbershop and I make a contract with you to give you 50% of my profits, but you don't actually get to decide what happens to my shop. You don't actually have 50% of the voting power. You just have the right to 50% of the office. I decide what's going to happen with these profits though. You just have a right to them. So if I distribute them to shareholders, or you would get part of it. Or if I, for example, do some buybacks, then you would benefit from that because it basically trades lockstep with the actual shares of these companies. But anyways, in Hong Kong, there's still VIEs. So I guess there's still the same concern still persists. So Diddy, unfortunately for them, not meeting those requirements. It experienced a massive drop of over 44% today. Actually bought 4 more shares. I'm just really curious what's going to happen when they do delist from the American exchanges, whether it's going to go to OTC right away or if there's going to be some kind of period. So this is just an experiment to try to find out what exactly is going to happen. So maybe I can even talk about that during that event. All right, look, I ain't gonna lie, this feels pretty bad. Just feels a lot different than in 2020 when the market was crashing very swiftly, because I knew they would be coming back. I knew that they're gonna flood everything with liquidity, with cash, and things are gonna recover because just market mechanics. But because this decline is so orderly and it's not a panic, then it has me actually worried a little bit. Some of the problems actually cannot be solved with money printing, right? For example, inflation. I mean, the root of the inflation is the money printing, so you can't fight inflation with more inflation. It doesn't make sense. It's pouring gasoline on the fire, right? So the buying up of stuff is, not out of the question, but it's less likely that the Federal Reserve is going to come to the rescue. It's less likely that fiscal stimulus is going to be on top of everybody's mind, inflating everything. But there are other problems too that are not really solvable, like supply chain issues. Right? You can't just paper those over either. So that's going to be rough. Geopolitical issues, cutting trade ties, and all these things cause markets to be very inefficient. It causes a lot of problems for economies, dislocations of capital and workforce. And it seems like it's just deteriorating. It's a slow deteriorating grind lower. And my fear is that it's going to continue to happen for quite some time. But I'm not gonna like turn bearish or anything like that. I'm still a bull, mostly bull, because I think that we're in an inflationary trend that will not be broken. In fact, it has accelerated a little bit, right? Overall, and stocks actually provide a decent hedge against inflation, and against inflation, it's good to have some debt. So I don't want to overdo it because I will not survive a downturn episode, a deflationary downturn spike near term. So I don't want to overdo it with the margin, although I'm like almost at capacity now, right? But at the same time, I don't want to completely get rid of my margin because I don't get to benefit from it. I will lose a lot of purchasing power if we just stay par with stocks, right? So even though the stocks go up, they might not go up faster than inflation, and then I'd be losing purchasing power over time. So it's a little bit scary. I'm not sure exactly how I'm going to approach this. I'm just going to take it day by day, try to collect some premium there, try to stick as much as I can to my premium selling strategy. And also, I've been catching some falling knives. Whenever there is a bear market rally like we had a couple of days ago, I just take a few stocks off the table. And then today I bought some up again, but it's a risky endeavor. I mean, the account is still gonna go down overall, and I'm just trying to manage this as best I can. I just really fear there's gonna be a prolonged, like, multi-year process, and I just hope that all the conflicts globally have a quick resolution, so markets can move forward and we can go back to making decisions based on economic data, company fundamentals, and not, who likes who and whose ego is bigger than whose. So, or who wants to hold on power more than somebody else. Anyway, sorry I haven't made a video in a while. I'll try to make another one every week now. I'm not going to be able to make one each day anymore. All right. Peace out.